This happens in the public markets a lot as well. So like when you see heavily shorted names, or when you know that certain hedge funds are on the brink, other hedge funds will go in and essentially force a margin call and a stop out, because then it's what causes all of these runs. And if you look actually inside of GameStop, the reason why you got all this gamification in the GameStop equity and a bunch of these other names was in part because of this dynamic. Folks that are highly levered, folks that don't have the right matching of risk. And what happens is they're solvent but illiquid. And then if you run the instrument into the ground, they both become insolvent and illiquid all at the same time, and the whole thing explodes. So, Brian, the question is, now that we know what happened, which is all of these crazy inter-party related transactions and, all of this stuff seems very illegal. There was a bankruptcy filing today, and up until today, it seemed like this issue was really about FTX International and Alameda, and it didn't touch FTX US, which for a long time tried to position itself as, well run and regulated as Coinbase. To be, they tried to say that. But now, if you look inside the Wall Street Journal, all the articles say that this is actually FTX Group, so the whole thing seems to be imperiled. Can you just help us explain that? Because now that's a lot of US people that were following the rules, thinking that this thing was matched one-to-one, that may be also affected.
Yeah. So look, I don't know who inside FTX's and its orbit of companies actually knew that the fraud had been taking place. It would not surprise me. I have no idea, to be honest, but it would not surprise me if FTX US people and employees had no idea that this was happening. I'm imagining if Sam was when he started doing this, he probably wanted to keep it to a very small group. Otherwise, this is the kind of thing that leaks and the whole thing blows up. Now, that being said, I don't necessarily think FTX US is worth anything as a business right now because of the brand being so tainted. And there probably was not great separation of these entities in the sense of, did they have truly separate boards and beneficial owners and governance? And Sam seems to have, it appears that FTX didn't really have a CFO or maybe even like a real board or anything like that. And so it's hard for me to imagine.
We found on Reddit, there was an article that appeared that said that the head of compliance at FTX was also the head of compliance at a poker site called Ultimate Bet, which in the 2010s did this exact thing, apparently. Some version of this where they went in and they looked at hole cards of poker players, and then a few employees inside the business would basically play against these folks, knowing what the hole cards were, ran this cheat, stole millions of dollars. Somehow that person found a way to be head of compliance at FTX.
Yeah.
10 years later, which is incredible. But back to this question. So now what happens now is you have the international business and the US business and Alameda Research all rolled up into this one frozen entity, right? With now regulators having to. So do you know what happens in a process like this? Like, is it that the DOJ and the SEC get priority, or is there some international monetary, like who unwinds all of this? How do people get their money back, if at all?
Yeah, so I'm not an expert at this, but my high level understanding is that the bankruptcy courts will essentially, and I believe they filed bankruptcy in the US, which is an interesting thing. I didn't know why they did that versus Bahamas. But anyway, the bankruptcy court will basically go through and try to find any assets of value. So, I mean, they still have some tokens and value. They have a venture portfolio. I think Sam owned 9% of Robinhood. There's various things that they may own. And then they'll kind of auction those off to various bidders on distressed assets and then try to distribute those funds to the customers. I don't know the exact process beyond that, though.
There was an interesting thing that Larry Summers did, I think, for Bloomberg, where he was asked whether this was Lehman or Enron. And he said, it seems more like an Enron than it is a Lehman. And Brian, I'm just curious how you think about it. Like, is this sort of a fraud perpetuated by a group of executives to essentially take advantage of a situation? Or do you think that this is more like a Lehman situation, which is a well-run business, I guess, that just, got caught in a liquidity trap?
I think my guess is it's a little more like Enron in the sense that, yes, they were over-levered and that kind of thing, but the minute that they moved customer funds in some way, shape, or form to backstop the hedge fund, that was, in my mind, fraud. And, that's more like Enron.
do you think now that we have to open the gates on regulation, like the whole point of crypto in some ways was, trust nobody. And, decentralization is the key. But here, what we see is a lot of people were tricked into trusting FTX and having their deposits there. And it was a centralized exchange, which caused all these problems. So it's like, it almost violates the principles of what the whole product market fit was supposed to be. So what should sort of the observer expect? And what do you expect as a business in terms of how governments now react to all of this?
Yeah. Well, I think it's really important to distinguish between the centralized players in crypto, which are custodians, exchanges, et cetera. Coinbase has a big business there. And the decentralized players, which are, self-custodial wallets, DeFi protocols, Web3, that whole world. So the centralized players should be regulated. And today they're regulated already like kind of traditional financial service businesses. But they don't have the regulation clear when it comes to the crypto aspects. So for instance, in the US, we actually don't still have clarity about what is a commodity, what's a security, which one should CFTC regulate versus SEC, that kind of thing. And that lack of regulatory clarity, and frankly, the climate of regulation by enforcement, the negative rhetoric from Chair Gensler in particular, has created this sort of chilling effect in the US that has pushed a lot of that centralized actors' activity offshore. In fact, 95% of the trading volume in crypto is now outside the United States, and it's come down a lot since the beginning of this year even. Now, the decentralized players, self-custodial wallets, DeFi, Web3, this is where crypto really has an opportunity to make a more fair and free and transparent system, because you can go look at any smart contract to see exactly what it's doing. Anybody can audit the code. If you have a self-custodial wallet, you can just trust yourself. You don't have to trust any other intermediary out there. And that's where you get true decentralization. And I think that's actually, those areas still have a couple of their own challenges. Sometimes people will lose their password or their phone and they'll lose their own money. So if you're trusting yourself, you still have to trust, that you're going to do that piece correctly. But there's a lot of good things we can do there around making social recovery mechanisms and MPC wallets and things like that.
To me, it seems the whole issue, if you come back, like what is the first string that you pulled that unraveled the sweater, was the fact that these tokens were created out of thin air. They had no meaningful value. Somebody prescribed a value, and all of a sudden, everybody else in the economy all of a sudden said, yeah, I'll take that as collateral. Look, you cannot do that in the regular world. I can't call JP Morgan and say, I've invented this thing. It's called a share in XYZ, and I'd like you to margin loan, give me a loan against it. So, Brian, explain, there's a ton of these tokens that have been engineered, right? And there's been a ton of these tokens that have been sold. So what should people do that own these things, thinking that there was going to be some safety or value, or, how do you think about all of these tokens that could be as basically as fragile and shitty and worthless as FTT?
The actual utility of those things is a little questionable. And so if someone's going to sort of mark those up on a low supply and then a low float and then somehow leverage that's going to get yourself into trouble. But look, I don't want to throw out the entire concept of people creating tokens. I think there's actually a lot of good stuff there. And it comes down to this idea of if you're trying to raise money for your company and through a token, that's fine. That should be a security. And there should be a regulated way to do that in the US. Like go register it with the SEC, let it trade on broker dealers. That's what we've been wanting to do for a long time. And the SEC is taking their time getting there. They don't, Gensler, to be honest, he doesn't seem that excited about the idea of this whole industry existing. And so anyway, but it should exist, and it should be happening in a regulated way. So if people want to issue a token that's raising money for a company, let's regulate it as a security. If they want to issue a token that's truly on a decentralized protocol, or it has some other purpose like voting in a DAO or rewards or something like that, then that's probably not a security. And let's be honest about that and allow those things to trade in a different environment, a different regulator under the CFTC.